Dinshaw Irani of Helios Mutual Fund joins us on the show. Hi Dinshaw, good afternoon and good to see you win. Well, since we're just talking about insurance, wanted your view. How are you all placed to this theme, the insurance theme? LIC out of nowhere is up 7%, been a rank underperformer, but today coming back to life. In fact, the sector on the whole hasn't created too much returns if you compare it with what the other stocks have done.
So, Nigel, first of all, thank you for having me on your show, and a very good afternoon to you, your team, and the viewers. So here's the thing, Nigel. My feeling is that there were a couple of positive points which came about. I mean, the clarity on the surrender values which came about yesterday, saw the stocks reacting negatively, and then today finally they're looking up. But however, having said that, I think it's a sector which hasn't performed at all. And maybe the new money which is coming in is trying to get smarter and try to pick up stocks which are in the which haven't done well in this rally as such. So our feel is that this is not actually we're not too bullish on insurance at all as of now, but we are very bullish on the financial sector though. So I'll leave it here.
Financial sector, I mean, what's known is your affinity towards the private sector, large financials, Dinshaw. So just wanted to know whether you continue to back that theme. While you back that theme, also dabble around, these others which are moving?
So actually, Mangalam, the fact is that we are fairly bullish on the financial sector overall. Forget about the private sector banks. We have a few public sector banks too. And obviously on the services front, we got quite a bit of exposure on NBFCs, on housing mortgage companies, and so on and so forth. So we're quite, in fact, we are so bullish that we brought out a new fund. And in fact, today is the closing. It's a financial services fund purely on that basis. I mean, if you're looking at the economy growing, this is the backbone of all economies which are going to grow. I mean, and the fact is that India's probably going to go at a very sharper pace than what it done earlier. So it's obvious that this sector will do well. The perception is that the sector hasn't done too well in the past 3-4 years, basically during the COVID period as such, post the COVID period, sorry. The fact is there's only one major overhang there, and that's a third of the index, the weight of the index. So I think that particular stock has turned around. That's one of our favorites. I won't even hide the name. It's HDFC Bank. And I think that stock looks pretty well poised for a run-up from here as such.
Got that. Dinshaw, so tell us more about financial services. HDFC Bank, we know it's been one of your old favorites. But really, how else are you approaching this space? It's a wide, diverse setup. In between, we've had a great run on a lot of these stock market-related businesses, right? Whether it is wealth management companies or whether it's exchanges. So is that an area of preference? Within insurance, you said you'll be selective. So, what else will you look at? What about, other businesses? What kind of NBFCs? This is a wide universe. So give us some more color on your preferences.
So, Surabhi, good you asked that question because that sector banks are just a part of it, right? But private and public put together, there are some 12 or 13 other subparts to this sector. And as you rightly mentioned, the ones which we call the gatekeepers to the equity markets, which is your brokers, wealth managers, the exchanges itself, and obviously the rating agencies and so on and so forth, and the depositories. There are lots of these smaller players who are working around, or the distributors, if you will. So these are the ones which are really exciting. But unfortunately, the index is very skewed towards banks. In fact, public and private put together is around 80% of the index. So I think if you go away from that, and if you look at purely the services, it's going to be a fairly exciting market going forward for both the banks and services put together. But let's see how that goes. Keeping up.
Okay, the good luck charm, Dinshaw, this afternoon. As you speak, the markets have moved to the high point of the day. So we'd like to attribute it to you, and you can take credit for it as well. But for the time being, good to see. I don't know whether 23,500 is here. It's just a number, but you like to go into the weekend at fresh all-time highs. And that's precisely what we're seeing.
He spoke about his old favorite that he's been backing, and he, made no bones about his love for HDFC Bank. So the intraday chart of HDFC Bank comes up for you. That's the one that actually led the Nifty higher. It's been doing, it's been underperforming, but its sheer weight on the index has led, not only the Nifty higher, the Nifty Bank higher as well. And it's a fresh record high that we're looking at. So we can give him credit, all the credit here this time around.
Absolutely, because this was the one part of the market that was not performing. I mean, I was saying this even yesterday, today, that banks are not firing, not firing. Well, they've started contributing. Then you have a giant like Reliance. So, you know, between, I think, these two heavyweights, they're more than making up for the sluggishness that we've got on the IT side of the screen. But yes, we've got those fresh all-time highs coming in.
Well, that's right. Dinshaw, you were briefly speaking about these capital market plays. I think MCX and Motilal, you know, both those two were some of the plays that you had in your portfolio. You want to update us if that's still intact?
Oh, yeah. So sure it is, Nigel. In fact, just before this, you mentioned about the all-time highs. You know what? I've told all the channels that I'm not going to come and comment on all-time highs because every day is going to be one. Maybe a couple of days lag later, there'll be one. So, but that's what the way our markets are going to be. A peak is just a small step in the overall game of things going into the future as well. So, yeah, we continue to hold both these stocks, and we're fairly bullish on both of them.
Outside of financials, what are you looking at right now? Because y'all were backing Zomato for the longest time. Consumption, people are believing that maybe, you know, there would be some recovery in rural consumption, etc., or rural infra. How are you all playing this non-financial side of things?
So the rural part, the rural recovery, I don't think our portfolio is going to be much impacted whether there's a recovery or no, because we were looking at, as we had highlighted, slightly more higher category of consumption. We were looking at tourism, the likes of Zomato, which again is, so these are the plays that we are playing consumption with rather than pure FMCG. I think rural recovery will more or less have some impact on FMCG, but I think they're already priced into that particular sector. So we are more into discretionary, and that was a higher end discretionary. And the call again is that the real wealthy households are going to grow in leaps and bounds as our economy grows.
So is it through Titan or is it through Kalyan Jewellers? Or what would some of the names be there?
None of these. As I said, tourism is a big one here for us. So we're quite overweight here on tourism itself. So.
Okay, fair enough. Dinshaw, I mean, how are you looking at the capital expenditure related plays? I know we've been discussing this for the past 1 year, and you've been, you know, telling us about how it's not a really, you know, hot preferred sector for you. But the fact is that the stocks are still running despite the election day volatility and all that followed in the last, you know, couple of days. Look at how quickly they've danced back. I mean, whether it's defense names, whether it is even the private sector, capital goods major. So what's the thought? Not on the financial services front, but other portfolios. I mean, how are you dealing with this?
I got that. So Surabhi, actually, you know, we were quite, so in fact, today morning only I was looking at one of the manufacturing mutual funds. They had pharma in their portfolio. They had FMCG in their portfolio and paint stocks. And I don't know. So in that way, we already invested in manufacturing. We got defense, we got capital goods, we got these EPC plays and stuff like that. So I think looking at that portfolio, I think we are very much there in manufacturing. And we've got good stocks there, so let me assure you about that.
No, but I'm not talking about manufacturing from the point of view of, okay, if you're making a candy, that's also manufacturing, or if you're making biscuits, that's also manufacturing. I'm not talking about that, but I'm saying more in the pure sense of the term. You know what I'm asking? You know, your ABB, Siemens, and defense, and railways, and so on and so forth.
So ABB, Siemens, I mean, good you mentioned that we did look at those stocks, but we couldn't justify the valuations, and especially for guys who are into capital goods. So we leave it there, right? The MNC probably valuations are kicked in there, but frankly, I mean, there are a few corporate governance issues also around, especially for Siemens. But anyway, we leave that there. The fact is that we're fairly heavy into defense. We are totally overweight in defense. We got two big players, one private sector player. And obviously in manufacturing, we got the biggest guy around, not biggest guy, but he's into the EPC part of the business. So he's fairly good, well placed with us. So I don't think we are underweight manufacturing. In fact, if anything, we are highly overweight manufacturing in that sense of the word. Okay. Like oil and gas also classifies as manufacturing. So we're fairly, overweight, as in massively overweight there. So these are the ways we are playing it. We are trying to be a bit more saner in our approach to valuations than just trying to pick up whatever has a manufacturing word in it.
Okay, all right. Dinshaw, I wanted your comment on telecom. For the time being, you know, we have some news that's flashing for you on the screen that Vodafone's looking to sell its entire 2.3 billion stake in Indus Towers. So that will be a bit of an overhang. And I think the article mentions that it's likely to be on the cards sooner rather than later. I think they're talking about next week itself. So that will be a bit of an overhang on Indus Stars. I think that's why that stock has come off a little bit from the high point of the day. We'll have to wait by to see more on that. But Dinshaw, your comment on the telecom space out of nowhere, you have Vodafone that came back to life. And, now, in fact, the street is hoping that in the near term, they'll survive. And maybe they've revived, they are going to survive. And maybe at some point of time, they'll thrive. But for the time being, I think the street likes the fact that they're going to survive. How do you all have exposure to the telecom space?
Yes, we have. We have Bharti, in fact, on our portfolio, which you can see in the May end portfolio as such. And we're going to play it with a very stable player who's into cash surpluses now. In fact, if you remember telecom not so long back, the whole industry used to have a heavy capex. And as a result, there were negative cash flows and so on and so forth. The cash flows are now positive. In fact, Bharti came about saying that from here on, you're seeing peak capex is happening. And from here on, you'll see a downturn in our capex because 5G is already into our price. So it's obvious that we'll go with the most stable of players. I don't think we'll be too excited with what's happening in Voda because there are a lot of ifs and buts floating around there. This has to happen and that has to happen. This will happen. So this is not how we play it. We are with the clarity that there should be multi-year tailwinds and that should be easily visible to you. So.
All right, a big move is what we're seeing on Vodafone Idea on the back of that V, as we call it now. But Indus Towers, as understandably, off the highs on account of that likely supply that's coming in. These are news lines that have come in to Reuters via sources. All right, Dinshaw, thank you so much for joining in, and as we say, congratulations for a record high on the Nifty being there, as you were talking about it, and we will speak to you soon as well.
Pleasure.
A short break. There's some profit taking actually from record highs. Now the Nifty is up around 60 points, so 30 points off highs, nothing really to worry about. Take a short break, come back. We will get you a check on what dealing rooms are saying in our special D Street chatter. Also tell you what to buy today or sell today for a reverse trade 3 days later.